Hello friends, today we will discuss the latest CBDT clarification in respect of taxation of EPF contribution above Rs. 2.5 lakh. Finance Minister in Budget 2021 announced that any contribution from an employee over and above Rs. 2.5 lakhs are taxable income from financial year 2020-21. In this regard, CBDT issued the notification dated August 31, 2021 to provide clarification how the interest will be computed. CBDT clarified this confusion and notified us below. From now onwards, you have two EPF accounts, non-taxable EPF contribution accounts. This account is the balance of all the below mentioned balance, closing balance of your EPF account as on 31st March 21. Any contribution which you make every year which is less than 2.5 lakh a year and your employer EPF contribution and interest earned on such employee and employee share. Taxable EPF contribution account, any contribution above Rs. 2.5 lakh a year by an employee from financial year 2021-22 onwards and interest earned on such contribution on yearly basis. Now from this taxable EPF contribution account, whatever the interest you earn on yearly basis is taxable for you like bank FD. Now let us understand the concept with the illustration. In the top table, you can see the contribution of employer and employee for the financial year 21 and financial year 22. The year 1 contribution is 1.2 lakhs and the year 2 is the contribution would be 3 lakhs. Now, how the things will be there? So, first let us see the non-taxable contribution account, which starts from 7.93 lakhs. On this, we add 2.5 lakh of contribution, which is free, and then we add employer contribution, which is 3 lakh, and then we add the interest at the rate of 8.5%, which is 91,000, and the non-taxable contribution account closing balance on March 22 will be 14,34,000. And then we see the taxable contribution account. The contribution is 50,000 rupees, and on that the interest portion comes 2,000 rupees. So the taxable contribution account is 52,000 rupees. Now from this chart, 2,000 rupees is going to be taxable in the hands of the employee. What are the important takeaways? The rule is effective from April 1, 2021 and hence excess interest earned is taxable from current financial year 2021-22 and not from the next financial year. The rules makes it clear that withdrawal of exemption is prospective from 1 April 2021 since it grandfathers the balance in PF account as on 31st March 2021 by making it part of the non-taxable contribution account. The PF Trust currently maintains separate accounts of employers and employees' contribution, interest accrued on respective amounts, and withdrawals therefrom. Since employers' contribution in excess of 75,000 and accession thereon is also taxable from 1st April 2020, the trustee may need to practically maintain taxable and non-taxable contribution accounts for both employers and employees' contribution. Now, is the clarifications provided all the confusions in the mind of the taxpayers? No. Let us see how many open questions are there. From where employees get the information that they're required to offer how much interest income in the return of income as same will not form of their Form 16. So that 2,000 rupees in our earlier example will not form part of the Form 16 of the employee. So how we can say that how employee can know that how much they have to offer for tax in their return of income. Is PF trust required to deduct TDS under Section 182 or under Section 184A? Because both have a different rate of TDS. When PF trust will deduct and deposit TDS is monthly or annually at the year end. The rate of interest for last financial year will be determined by government after June 30th of next year. How it is possible to deposit TDS before April 30th every year? Because we have to deposit TDS for any financial year before April 30th. And in the absence of rate of interest, how PF Trust will provide interest and how they will deduct TDS. Is employer required to deduct balance TDS? Because the employee may have to require to pay tax at the rate of 31%. If PF Trust will deduct TDS at the rate of 10%, then how go? Then there will be shortage of tax. Employee will file the return of income. So for that, is company required or the employer required to deduct balance TDS amount, which is around 21%? What will be the process of new EPF account? The EPF authority should come with the guidelines for the new process. How this will impact the employees, where employers can exceed rupees 7.5 lakh. Both CBDT and EPF authority should come with a clarification how this will work, where employees contribution more than 7.5 lakh. Will taxing employer contribution more than 7.5 lakhs lead to double taxation? Do we have an obligation to include the employer contribution from earlier employment? What will be the process when employee resigns or joins during the year? In the case of new joinees, are we mandated to include the interest of the earlier employment contribution? So we can see there are a lot of questions are there which require to be answered. And in the of any answer, there is ambiguity on withholding obligation for interest accrued on the taxable contribution account. As per the extant law, the withholding obligation on trustees of the PS exists only in limited circumstances, like termination of employment before completing 5 years continuous service. It does not cover credit of interest to the taxable contribution account and a withdrawal after completing 5 years continuous service. The interest accruing in the taxable contribution account is not taxable salary income, and hence the employer also does not withholding obligation. This ambiguity needs to be addressed by CBDT by making appropriate amendments. So we are hopeful that very soon it is better that CBDT will come with more clarification, at least in respect of withholding tax obligations. We request you to provide your comments and feedback to our email ID taxhra@gmail.com and provide your views, and if you think any more clarification is required, so we will try to approach the board so that board may come up with the clarification as soon as possible. Thank you.